warm welcome. You've tuned into Season 6 of NSE FinWiz, powered by CNBC TV18, and I'm your host, Nitya Balakrishnan. This is that show where we teach you how to make your money work for you, where we help you navigate the almost puzzling world of personal finance and investment. And to do this, we've traveled all the way to one of India's leading automotive majors, Ashok Leyland in Chennai.
Founded 7 decades ago in 1948, Ashok Leyland is the second largest commercial vehicle manufacturer in India. The brand is also known to be a leader in the commercial vehicle segment with its constant emphasis on innovation, along with an ever-increasing geographical footprint. The company has also become a front-runner in the medium and heavy commercial vehicle segment with a well-diversified portfolio across the automobile industry. This week, NSE FinWiz is at Ashok Leyland's campus in Chennai to engage with young minds assembled there on the theme Invest in Yourself, Your Path to Prosperity.
I think in each milestone of our life, it is very crucial for us to understand how much to save and how much to invest and in what proportions into debt and equity. So having financial literacy is more important to be able to better manage our wealth.
In private sector, we don't have the luxury or the umbrella of insurance like in pension. So anything which we make today, unless we preserve it and create it, we will not have anything with us in the sunset years. So wealth management is the core subject for which we need it in the private sector.
I always have a fear that probably I might lose my money because of lack of understanding and up-to-date info on these things. So maybe from this program, I'd like to ask your presenters as to how I can get to know the information about these financial instruments so that I can get to invest without too much of a worry.
In this week's episode, we're joined by two very special guests, Mr. Lavai Navlaki and Harshvardhan Roongta. Thanks so much for joining us on this episode. And first things first, of course, in this season, we're going to be talking about the theme, which is increasing your personal wealth, how to make your money work for you. And without further ado, let me throw the first question open to Harsh. Answer exactly this, because we're looking at a whole host of young employees out here who are looking to understand how best to make the money that they work so hard for work for them in return.
When you talk about money working for you, it's important that money generates that kind of return that beats inflation. So just tag the entire conversation around, is your money earning more than inflation? So when you talk about make your money work hard for you, it means that it should retain its purchasing power.
Absolutely.
So which means you have to create a portfolio, the weighted average return of which is more than inflation.
And if you can jump in here, Lavai, a lot of us believe that saving every month is the same as investing. Talk to us really about if that's true at all.
One of the big things that you have to keep in mind is that where you end up losing a lot of money is by keeping money idle. So you leave it in your bank and it earns you that 4%, and if you're lucky you got 6% in some other bank, but it's taxable. I think it's very important first and foremost not to leave money idle. Have the bare minimum that you need for your monthly expenses in the bank. I'm not saying invest everything else from the long-term point of view, but have it in a place which is safeguarded from your own sort of misbehaviors, if I may say it.
Fair point. If I can again come back to you, Harsh, then talk to us about vehicles to make that money grow, because traditionally it's always been the savings bank account, but you're saying that so much more you can do. Talk to us about a couple of those tools.
So you would have different requirements over different time spans.
Sure.
So one is an emergency fund. Now the nature of that emergency fund is that you would require it at any point in time. So the investment also will match this particular requirement of yours. So essentially it needs to be in a bank fixed deposit, for example. It could be in a liquid fund. It could be in those products which essentially have a liquidity as their priority. Then comes your other goals. You could have medium term goals. You could want to buy a bigger car, or you would want to buy a house, or you would want to probably go on a vacation, or could be some other medium term goals which are say probably 3 to 5 years away. Now if your goals are 3 to 5 years away, then you cannot put in a product which does not beat inflation. So you could possibly add some bit of equity investments, not entirely. So you could add say probably a 10, 20, 30% based on what your requirements are. and you invest that money in a hybrid kind of a product which has debt and equity both.
Sure.
Then if you have goals which are 5 years in away, which are 7 years or probably 10 years away, clearly the objective is to create wealth. Clearly the objective is that I should be able to buy more than what I can buy today. And I want it to grow to a certain point wherein less money invested gives me more returns. Now, which are those kind of products which have the potential to generate that kind of returns, which is equities. So essentially, how do you make your money work hard? How do you create an ideal portfolio? It's divided into different time sets and choose products which match that particular time set.
And talk to us really about your top 3 picks of how to invest or vehicles of sorts while you invest into the equity markets.
I think the most important investment that you need to make is make a good investment in an investment advisor. And for that you need to spend time and select. So if you come to me, I'll tell you great things about me, Harsh will tell you great things about himself and so forth. But you spend time and figure out who is matching your requirement. So that's number one. I think that's the most important thing. The second thing to look at is what your goals are, and to break that up for liquidity purpose, for protecting risk, for creating wealth. The third element that we do as registered investment advisor is to ask you to undertake a formal scientific risk profile test, which enables us to determine what is your capability of taking risk, your tolerance to risk. So you might require a very aggressive rate of return to meet your goal, but you are going to be very jittery if more than maybe 20 or 30% of your money is put in equity.
Thank you for that, Mr. Lavai. And on that note, it's time to slip into a quick breather right here on season 6 of NSE FinWiz. But stay tuned, because on the other side, we're going to be talking about lucrative tools to best build your personal portfolio. Welcome back. We're still in conversation with Harshvardhan Roongta and Lavai Navlaki here in Ashok Leyland in Chennai. And let me go directly to specifics now. And Lavai, let me begin the segment with you. And can you throw the spotlight on the different type of mutual funds that one can invest in?
Mutual funds are just a pooling vehicle. They allow investors like this group over here to put in different amounts of money, give it to a fund manager and say this is the mandate that you have to invest in. So you can get an equivalent of a bank account, of a savings bank account in a liquid mutual fund. You can get an equivalent of a bank fixed deposit in a debt mutual fund. You can get the equivalent of investing in the stock market in a equity mutual fund. Now beyond that, you get a few combinations as well, where you can do a little bit of equity and a little bit of debt, which comes in as a hybrid product. You can then decide I want to take a lot more risk with the equity and invest only in a particular sector, only in a particular segment, because I like pharma, I like technology, so I only want to put money there. So you can do all of this, but all of this, I think one has to keep in mind what the goals and objectives are.
Harsh, would you want to jump in to add anything to this? What do you think are, top 2 or 3 best kind of funds, or does that again depend on an individual investor?
So no, I'd like to throw light upon what is the large cap, mid cap and a small cap.
Sure.
There are 3 different kinds of companies that are available. So, and which has been very standardized now and defined by AMFI. So it's very clear for us to understand that. So when you are investing into equities, you are ineffectively buying shares of that company and you're becoming a partner of that company. So what you need to understand from your side is which size, what kind of companies do I want to invest my money into. Large cap are all of those companies, as per market capitalization, they rank 1 to 100. So all the top 100 companies of the country in terms of market capitalizations will be called large caps. Typically if we see, all companies above market capitalization of 30,000 crores and above are large caps. Now the mid cap. So as per the AMFI definition, 101, the company ranked 101 up to 250 is called a mid cap. So the market capitalization would be about 10,000 crores to 30,000 crores. So small caps are all 251 onwards till the end, and all market capitalization up to say probably 9,000 or 10,000 crores. So when you are comparing a return generated by a small cap fund with that of a large cap, it's actually comparing apples and oranges. As an investor, you're comfortable putting your money into large caps, but you've looked at only returns, then you'll end up picking up probably mid caps or a small cap. So you need to understand what you're investing into.
Absolutely. And in fact, we're sitting in the last quarter of the fiscal year, so it's an apt time to talk about, everybody's scurrying to make their investment declaration. and in that sense sometimes even tending to purchase insurance that is not necessarily needed by them simply as a guise to save tax. So Lava, if you can actually talk about the importance of investing into insurance, or if setting aside money towards insurance is investing at all.
Insurance, yes, becomes a temptation to invest in from a tax point of view, and because you look at it and say, okay, if I get this receipt and show that this is the amount of premium, I'll get a tax break. So insurance really is not investment. We all must understand the purpose of each of the products that we are investing in. The purpose of insurance, life insurance, is to replace the economic value of a person. So if you are contributing 1 lakh rupees a month to your family, if you are not there, imagine an ATM giving 1 lakh rupees to your family, cannot replace the emotional value, but that's the economic value of you.
If again I can continue with the core topic for this segment, which is really building the best portfolio for yourself. Again, we're talking about another tax saving instrument, which is the equity linked scheme. So ELSS, can you talk to us really about ELSS as a tool to park funds?
Now you want to invest in equity because you believe that's the right product, and you also want to save tax. So ELSS is a product which offers you a combination of both. It is an equity investment and it qualifies for tax deduction under section 80C.
Sure.
The only condition being that because it is enabling you to save tax, there is a lock-in period of 3 years from the time you make an investment. So if you have long-term goals, why not put that money in ELSS and also save tax at the same time? It helps you meet both your purposes.
Let me then take a couple of questions from members in our audience then.
Hi, actually I'm looking for a corpus of 1.5 crores over a period of 15-16 years where I can spare like 20 to 25k a month. So what kind of the portfolio investment you propose me for that?
Yeah, so you're looking at specifically for overseas education.
Yeah.
So couple of ways to do this. One is to make sure that when you're making your monthly investment, some portion of that money is going into investments which are foreign currency based and not rupee based. So you get feeder funds in India which are investing overseas. The other thing is obviously then again not put everything in US dollar equivalent, because you might see a situation like we saw for 4 years just before these last 3-4 months, where the rupee actually strengthened by 10% in the last 4 years. Then in the last 1 year or so, it has depreciated by 10%.
Thank you. We have time for one final question in this segment.
I just want to know whether I can go for buying a home now itself, or let me invest something and get money. Then instead of paying EMI, I can buy in my own money. So what's the best option?
The decision to buy a house essentially is what your requirement is. So if it's your first house, if it's a house that you're going to use for self-occupation, then there is no discussion, there is no comparison that you would make it with an investment. Okay, because there is a different emotion that is attached to owning a house for yourself. So if it's your first house for your self-occupation, then of course you will go ahead and buy it right away and pay it over a period of time through EMIs. But if it's an investment, if it's purely from a purpose of investing, then you have to evaluate whether it makes sense to invest in real estate as an asset class. What is the future of real estate, and vis-a-vis what is the future of businesses via equities? So when you're investing in equities, you're investing in businesses, right?
Well, on that note, it's time to take another breather on this show, but stay tuned. We have individual Q&A with employees here at Ashok Leyland on the other side. So good to have you back here on NSE FinWiz, powered by CNBC TV18. And let's directly throw the floor open to employees here at Ashok Leyland in Guindy, Chennai. There, the one standing, the gentleman in the purple shirt.
In my view, I believe that there is an element of luck in stock market. Even though we say it is a formula and you know everything about the market, but still I feel there is an element of luck. Should I depend on my luck or on my capability? Your views, please.
You're actually right that investing in stock market or investing in any, even real estate for that matter, you may be just lucky to have bought into a property and there's a highway that just comes up around it, or there could be some economic development around it, so you could gain out of it. So in equity or in any other investment, there is definitely a factor of luck involved in it. Now the other part of your question was, how do I know whether I'm lucky or not? This you will know only after a period of say probably 3 or 5 years, when you realize that I've gotten at the wrong time. Now how do you mitigate that that luck part of it? Is that you invest every month. If you were to buy into a particular stock and you're going to spread that investment over a period of say 3 to 5 years, and you're going to invest every month for 3 years or 5 years, you're going to average your investing, your cost of investment over a period of 3 to 5 years. So that dependency on luck will come down. But you're right, there is going to be a factor of luck.
If we can have the microphone over to the gentleman.
Hello sir, I'm Santosh. I started my investing in 2017 with my strategy of investing in small caps. So in 2017 I have a good returns, but whereas if I see from Jan 2018, the market was fallen and the index is negative 35% in small cap. Now I have a question at this situation, whether should I buy more stocks and average it, or should I sell it, or should I hold it? How will be the market for small caps in future?
So I think the important thing is when you got in, what did you get in for? What was the time horizon that you invested for? And if one was to look at small caps and their historical performance, typically the small caps tend to be a lot more volatile, because as Harsh explained earlier, you are looking at company number 251 all the way to the end. So if your particular investment in the stock directly or in a mutual fund picked company number 645, then that company may not do very well, right? Now, had you got into small cap index saying that first and foremost I'm looking at this from a 7 to 10 year perspective, number one. Number two, I have not put all my money here. I have made sure that I have equal pockets or whatever is appropriate for me into large cap and mid cap. I'm just looking at the equity component, so ignore the rest. I'm assuming your allocation to equity is correct. Within equity, you need to obviously break it down, and one of the problems that you might have faced is that looked at more past returns when you got in, and it looked extremely attractive. It was obviously the best asset class to be in somewhere towards the end of 2017, and then it turned out to be the worst in 2018.
Yes.
There is no guarantee to say that 19 will be good, bad, ugly, same, flat, negative. We don't know, but we can say that if you have selected right and you are willing to go the path, and of course more importantly, I hope you have not put all your money in 17 and waiting. If you have staggered it and you've got whole of 2018 averaged at much lower price. So when the market sort of moves up, you will get benefit for all the entries that you have made in 2018.
And on that note, we're absolutely wrapped up on this edition of NSE FinWiz. Lavai and Harsh, thanks so much for joining us on this episode. For all of you out there, their insight is just tip of the iceberg. Do log on to our website, nsefinwiz.com, for more such tips on personal finance and wealth management. Of course, do follow us on Facebook and Twitter. The handle is @NSE FinWiz. From the entire team that put the show together, goodbye and thanks for watching.
I found this show to be really valuable. I have been investing for quite some time, and even so, there was a lot of stress on understanding ourselves as an investor before really making any decisions. That's been the key takeaway for me. For instance, understanding my risk appetite and what are my timelines and horizons.
Coming here, I learned something on what is investment, where to invest, and how to invest. So looking forward, I'm just planning to invest something, but as they said, I have to think about and search, understand.
Today's session, it was very useful. Actually, I was not into stock market so far, and today I got good insights into the business investments, and definitely I will start investing at least 5% of my savings into stock market.